Good morning. Welcome to CurrencyChange Daily Foreign Exchange Markets Review, where today is Friday, 30th of August 2013. My name is Laurent Guilbeault, Managing Director at CurrencyChange. The main topic today is the UK Parliament, who rejected yesterday a plan from Cameron to use military forces. US President Obama has then to recalculate the cost of acting in Syria. Top US officials, led by Army General Martin Dempsey, the chairman of the Joint Chiefs of Staff, have questioned the potential cost of an attack and the US ability to limit any action in the face of possible Syrian retaliation. French President François Hollande has said Syria's use of chemical weapons can't go unanswered. Hollande has wider latitude to take limited military action without parliamentary approval in France. Meanwhile, the broad-based rally in global equities and decline in commodity prices also indicate that the market anxiety around Syria is easing. In the US, the economy is growing much faster than thought, according to release yesterday, as the GDP rate for Q2 was revised up from 1.7 to 2.5, more than doubling of the 1.1% in Q1, as surging exports helped to offset reduced state spending. As long as non-farm payrolls grow by more than 150,000 next week, the recovery in the labour market should be satisfactory for the Fed, with this strong economic data, to withdraw its economic stimulus by tapering off its vast quantitative easing program of 85 billion per month. In Europe, German unemployed numbers released yesterday missed expectations. For the first time in 3 months, the level of unemployment in the Eurozone's largest economy increased. As previously indicated by leading PMI reports, job growth in the service sector was offset by losses in manufacturing. German retail sales, also just released this morning, was strongly below expectation, minus 1.4% for July versus 0.5% previous months. Consumer prices also stagnated, and these reasons could limit the level of optimism from the ECB, who meets next week. In the UK, businesses are already feeling more optimistic. According to a survey released yesterday by Lloyds, it reported that confidence is its highest level since February 2010. Next week, key releases, PMI surveys, industrial production, and the Bank of England MPC meeting on Thursday will be of greater importance for the pound. In Asia, for the first time for a long time, consumer prices increased at the fastest pace since 2008 at 0.7% versus 0.6%, which is a good thing and a first indication of the fact that AB policy might lead to get out of 15 years of deflation. In China, for our clients, be aware port operators' shares rallied on speculation the government will allow more cities to join Shanghai in starting free trade zones. The zone will likely offer a tax incentive to insist more companies to set up offices and warehouses in ports. In this free zone, it will increase the volume of international cargo goods, which will be then transported from China globally. In terms of exchange rate, we are currently live on the sterling dollar, 155.19, on sterling euro, 117.36, sterling Aussie dollar, 173.32, sterling New Zealand, 199.31. The dollar went higher yesterday, helped by the stronger than expected upward revision mentioned earlier for US Q2 GDP, which brings good expectation in terms of QE tapering in September. For the economic agenda for today, we have at 10 o'clock UK time, Euro Consumer Price Index expected 1.4%. We have at 10 o'clock Eurozone unemployment rate expected at 12.1%, at 1.30 US PCE index that the Fed loves, at 2.45 Chicago PMI index, very volatile, expected at 53.2. If you require further information, visit CurrencyChange.com or contact us on +44 027373 2686.